All right, all right, all right. What's going on, everybody? It's your boy, Doc. It's just after 1 p.m. I have a bit of an audio issue. I hope it's not too bad on your end. But, yeah, we have a lot of action going on today. We have the Fed meeting coming in hot. That's around, 2 p.m.? And then there's a conference at 2:30, right? So if you're not familiar with the Fed meeting, it's the interest rate. It's decided on the board. Jerome Powell comes out. He makes an announcement, the new interest rate, and then there's a little bit of a press conference. In the press conference, there's questions and answers. Some are, softball questions, expected questions, and then others, kind of are a little more curveball. The tone that is used in those questions and the question and answer period can be just as, or maybe even more disruptive to the market as we know it. Just a little background. If you guys are experienced with it, great. Sound off in chat. Let me know. How long you've been trading. Where you guys, just anything you think we need to know. But this is the SPY we're looking at here. And so today, what we're going to really cover is, because there's an hour before the Fed meeting, we have some time to kind of just sift through and demonstrate how we can apply QTA tools. For some reason we're on the 10th here. I was given a lesson. We get to the 31st. So how we apply it, QTA tools, is on the backs of what we already know. And by what we already know, I'm saying like technical analysis, levels, trends, things like that. So technical analysis, right? It's our eyes finding levels and marking them off in case we need to revisit them and see how that comes into play for future actions. Let me just clean this up a little bit. I apologize in advance for the messiness of my charts, but I guarantee you all these lines do make sense. When you zoom in, it makes it a little easier. But on the daily, we can zoom out and see what's going on with the SPY. So let's just recap what's going on with the SPY, right? We had we can really go back to like right here, the pandemic, right? We dipped. We made a new low at the pandemic, and then from there, see you later. Big one came back, tested it, right? Now, remember this move, right? When you break a level and you see you come back and test it, and it holds, this is like the fundamental. If you take away one thing from a workshop or this workshop, it's that move, a break, a retest for higher. And then if you get really kind of cool on it, we can test to see that length. And now we can see that length right there. So a move usually tries to mimic or make a carbon copy of the predecessor. So we come into the move, we break, retest, we should expect, or could expect, actually, not should expect, a similar trajectory there. See that? Now, it's not all the time, but it's just, something to keep an eye on, something to keep in the back of your head there. Let's get rid of this. So technical analysis, right? This is something that we learn and we apply to our own charts. Now, you guys can look at this and say, wow, these are way too many lines. I don't need all those lines. What is he doing? That's the essence of technical analysis. It's an art and a science together. It's a bit of an opinion, right? If I handed out 100 sheets of paper and with this graph on it, and I said, all right, guys, show me some trends and show me some levels, some people would come back with totally different drawings. This is an art and a science. When we're dealing with quantitative method, right? And we're going to pull up the quant chart here. I think it's this one I have the SPY on. Yeah. These levels are math. They're cold. They're hard. They're rigid, right? This is not someone's opinion. This is quantitative mathematical expression or data, I should say, right? We have the buy zone here, the sell zone here, max pains at blue line. And here, these are weekly levels. The intraday levels will change from day to day. These are levels to watch. Now, these are not impassable levels. These are levels that you use to play, just like any other level. Just like a level on technical analysis, you play the level. Are we going to hold here for a bounce, or are we going to break, retest for more lower? We held here for a bounce, held here for a second bounce. And on the level here, we could see that, well, this is like last week's here, but you could see that the same bounce, this level is mathematical, right? 538, 537.50. This is what we call confluence, right? I like to look for levels that are on my technical chart as well as the quantitative math chart. This is the essence of how I use, at least, this is the way I use QTA. I look for things that line up, and this is pretty much what I do all the time. Like, I'll find, okay, this is a mathematical level. I see that. But when we're up here, it's almost like, okay, we're dancing around the max pain. Is this going to come into play? And when it does, that's when my ears perk up. I'm like, oh, we reached this. Now this is time for an action. Around here, we're right in the middle. We could go up, we could go down. We don't really know. But when we go and touch and hold this confluent level at 538, it kind of sets the tone as we have a better chance of rebounding off this, using it as support, being that it's a second touch, and you can start adding up all the data, the pros and cons of it. You start weighing it out and say, all right, we have a better chance of going higher. We hit the buy zone, hit the sell zone. And if you could play within those zones, that is half the battle. You know, we make a running, I hate to call it even a joke now, because it's really true. If you're just starting out, you don't know technical analysis too much, you can trade off of these levels. Now, I'm not saying this is what you should be doing. This is not advice on trading, but this is just, in theory, if you could play the levels, or teach anyone, just someone in, 8th grade or something like that. You say, hey, listen, I see you playing games a lot on your phone. Here's a new game for you. If we touch this level and bounce off, we should expect these lines to make the next level. If we break this next level and hold it, we should expect to go higher to the next one. And again, if we hold this one and do not break it, and we start rejecting, we play down to this level. That is like the basics of reading a quant chart in QTA. The 2 sigma levels, these are the outliers. This is the fundamentals of how the proprietary quantitative method is applied in QTA. The 2 sigma is simply the area of, so outside of here would be like at 8 or 9% of activity. Inside here is about just over 90% of activity. So we want to assume, I know we hate to assume, but we assume that most of the action will happen in between here. Once it breaks it, it's kind of like when you start reaching all-time highs in a, like when the SPY did, there's nothing to look back on the left side. There's nothing, there's open air. So outside of the data range, when we're in the 2 sigma, we kind of have this underlying feeling that it might want to travel back into it, almost like covering a gap, right? If you're not familiar with a gap covering, you have a gap and it has like a debt that needs to be paid. Once you have a gap, especially in the SPY, it kind of really wants to fill it. And a lot of people play that in the morning. Like if you have an opening, let's see if there's something recent here. Did it gap up today? Yeah. So this gapped up here. If this had opened right into a hard resistance, okay, I'm not sure what that sound was, but I'll talk about it later. If we opened into a hard resistance, they could normally play the gap down as a quick, easy SPY. This one's pretty much a big of a gap when you opened above that resistance, so I'd be a little hesitant to play down into the gap. Going off on a tangent, sorry about that, but this is what you look for to play the gap almost instinctively. That's the move. If we're on here and we say, okay, we're reaching this top level, we should expect the next one to come down. Not necessarily it's going to happen, but that's what I'm starting to think of. Once we start running into this resistance here, the idea of this, what we're doing here in the levels, we're trying to build a case, right? If we're a detective on a case and we get sent to a scene and we find a bloody fingerprint at the coffee shop, okay, that's a clue. We have no idea what's going on. We just have this bloody fingerprint. We're at an apartment now and we see another bloody fingerprint and a knife. Okay, now we're starting to build a story here. We want to build a story, build a case to present it to the DA as a trade plan. So what we'll do is we'll come up with clues and bullet points to see how that interacts. So in other words, we have this run up into the sell zone, and let me just check on something here. The only other way, yes, no problem. Yeah, we can record this. It is recording, I think. This is why we switched to YouTube at the last minute, to record it for a couple people that couldn't make it. So let's just check in the chat here and make sure everyone's in. Very, very good. So we were trying to build a case, right? We have this resistance here. I marked this off for some reason, probably with this gap right there. This is now 551, I would say. And now we have confluence here at 550, 551. We have the intraday. We're in the sell zone. And we have a technical analysis. That's 3 levels that are telling us that this is resistance here. The only thing I'm looking at is this VWAP that's giving us support. So we're going to hang out here until the Fed meeting, and we should see some action one way or the other. If we had been in the middle, right around the max pain, and the intraday was all, something in the middle, that would be pretty much easy to see, okay, the Fed meeting comes out, we should expect to maybe test the lower level, and we should expect to test the higher level, depending on the sentiment of the interest rate and the meeting. What we have here is it's a failure to have that. We're at one area. So my thinking right now is, if I was just off the top of my head wanted to be a little frisky and play like a lotto or something, it's easier for us to move down and hit one of these levels rather than pop up through here. In other words, if there is a really good reaction, we pop above this level, we see a break or retest for higher, that's fine. If we do not have a good reaction, it's easier to move down. We have all this resistance above here. So that's just something to look at when we're going into something like a Fed meeting, and you want to try and be you want to be a little cute. You want to try and play into it rather than reactive. So let's just mark off 2 p.m. right here. It's a little reminder. Oh no, mouse. There we go. Okay. 2 p.m. And make it money. So we have a little time before the Fed meeting, and I really wanted to go over more on how you find trades, or how you find entries and exits. That was a question in public chat. I think it was it Razor or Cheeser? Sorry, it doesn't matter who it is, but we wanted to find entries and exits. This is how you find entries and exits using QTA data. We're right now at the top of the resistance of a confluent level. It's also a technical level, and we have a big gap down to this side. If we had looked at, you want to play a couple of 0 DTE, something, where would I place this? So let's just play it. Now we're going to present the theory. The theory is, and I've seen this in chat, I believe that this might happen at the Fed meeting. Let's think that we're going to expect a negative reaction. Let's play this out, right? We're not placing a trade, we're doing hypothetical. We're making a case in our head. If we expect that, for some reason, whatever data we come up with, we have the instinct that we're going to sink at the Fed meeting. This would play into our data very well, because we have this confluent level here, and we have open space. This will be our first. We're going to break this VWAP. I don't think this will be supportive if it's a negative reaction for the Fed meeting. This would be our first level, right, at 547. But look at this gap, right? We talked about playing the gap in the beginning. We gapped up overnight, so we have this nice juicy gap to tackle, I guess, or to fill. This coincides with our levels here. A drop down to any one of these levels would suffice. Now look at here. This is more interesting to me, the 545 level. We have this one, which is the midpoint between the sell and the buy zone. We have the max pain, which acts as a magnet and also a support and resistance line. And we have this 2-day VWAP, just like your regular VWAP, but it uses 2 sessions. It uses today's session and yesterday's session, and it creates more of a smoother line. It's a little more respected, almost like when you're looking at moving averages, and you have your moving averages on, and you have your different ones. You'll have the close one, which is what, 5 I have up here, this purple one. 5, yeah, it could be respected, but when it's broken, it's not the end of the world. It's like, okay, the trend is reversing because we broke the 5 MA. You want to reserve that kind of thinking for a further out one. This is the 20, right? So it looks like it's respecting the 20 here. If we break the 20, that's of more concern. If we start breaking the other MAs, that's more and more of concern. The same thing goes with the 1, the 2, and some people in chat use 3-day VWAPs. This is the same theory. It's a smoother line. It's a more statistics in there, more stats. So it's a smoother average. The fact that these are now lining up, we have 3 levels, a triple confluence, triple rainbow, right? And it's close to filling the gap. So this makes sense. If we travel down and we break this intraday level, which also happens to be a support, this was a previous resistance, we broke it overnight. We kind of cheated, right? Anytime a level is broken overnight, I call it cheating, because the volume is real low and the market tends to either there's like a judgment period in the morning, like the memes with Gladiator. He's holding out his hand, and everyone's waiting for a thumbs up or thumbs down, and the market opens and like thumbs down, and then you see the gap fill, crush right down to it. If we hold it, this then becomes a good support, and this is what happened. We opened above that resistance. It tested it real quick in the morning. It said, "Yep, that'll hold," and we went up from there. That's not to say that this is going to hold again, but it's going to be interesting to see how this level is tested, because the intraday lines up real well and the technical analysis. So this is our first target. This would be the second one, and then of course the third one would be a nice revisit to this level 539 of yesterday. Excuse me. Sorry. Is everyone hearing me okay? Is the audio all right? Ask it in chat. So I'm reading here a consensus that, oh man, some people just make click. You know, you read an article and they just want you to read it, and you find out that they really don't have too much basis of their opinion. They just want someone to read their stuff. Well, I get it. It's a different type of business, but this is why I've kind of stopped relying on the news and everything like that, because I trust more in my technical analysis. Great. Vodka. Thank you, Vodka. Okay. So this is the theory that we're going on, or at least the trade idea that we're trying to hypothesize, right? It's almost like a science experiment. We're going to develop our variables and see which ones would make more sense, and then kind of go with it. So the first level that we're going to probably look at is covering the gap down to 545, possibly the cover at 543. This is going to be nice and big. So now we would normally look at the GEX, but I'm not going to bring that up because I don't want to confuse anyone before the Fed meeting. I'll bring it up before we go into it, but what I would normally do, we would pull up the GEX levels and try and see if there's any sentiment going on there. And then let me back up a second and just recap what we're doing. We're looking at technical analysis, right? We found levels on here that our experienced eyes, or from the experience that we have of trading, has told us that this is a technical level, right? Broke it, retested it, came back down. Now we're revisiting it, touched it. That's level. That's telling us this is an important level for it. Now we're going to the quant, and it's telling us the same thing. Important level, and the VWAP underneath, it could be an important level. So we have some information that's saying this is the top. What we want to do is see, do we have a reason to move down, right? We saw that the levels will allow us. There's space. There's room to move. There's room to move down here. But is there a sentiment? Is there an attraction to move down to 545? And that what we'll do is we'll open up the GEX. Let's go on, Vodka. We have a question. Why sometimes GEX levels are down with SPY and sometimes with SPX? Is there a better, worse, more used to, etc.? I'm trying to, let's dissect that. Why sometimes GEX levels are down with SPY and sometimes with SPX? Is there a better, worse, more used? I think maybe I'll answer that in my explanation of it, and if I don't, we can go back. Thanks, Amit. I appreciate the feedback. So what we do is, okay, so you see me, I have Discord up over here. These are all the servers and the tools I interact with. What we're focusing now is on QTA, and in here, we'll have the gamma exposure. This is available to everyone on the gold side. So before I forget, if you're on the fence and you're in the public area of quant trading app and you're thinking about joining, take this code down. It's DNOW30, and that will give you 30% off your first month. And when you join, the community is there to help you get acclimated. If not, you can reach out to me, Brian, to set up a terrific way just to start off. You go to dashboard, you go to getting started, and it's a checklist. And he's curated this perfectly to be a step-by-step introduction into how to use it. You know, you start at the top and you go down. There's videos along the way, weekly script intraday, introduce yourself, how to analyze, and there's instructions and videos on each step along the way. I'm not going to click on each one because my computer's already being overloaded with streaming, but just follow this down, and if you have any more questions, reach out in chat. But once you're in, you're going to have this open for you, gamma exposure. We'll have the 0 DTEs. These are the GEX. These are the expirations that are expiring today and the GEX that's associated with them. And then the weeklies. We got the SPY, the SPX, the Qs, the Russell. The same thing with the weeklies. And then also we have the top 7. Tesla, Apple, Amazon, Microsoft, NVIDIA, Meta, and Google. These are the weeklies. Let's go on to the 0 DTE today and see if there's anything of interest to what we talked about. Now let's review before we get into it. We were looking for our case down to 545. Right? That was the opening on the quant chart. Right here. 545. Now, what the GEX is going to tell us is that there's any interest in a level along our journey. And right now, we'll open it up. We have the spot price right here at 550 where we are. There's a call volume spike where we're at, which to me, I treat that as a bit of a resistance. If we're over it, it comes support, but usually the call volume spike acts like a resistance. Same thing as a call block on the option volume chart, which we'll get into at another juncture. But look at here, 545, the absolute GEX, which I'll explain in a minute, and this high volume GEX, negative GEX bar. Real quick, the negative GEX is navy blue here. If it's red, that means the net GEX, the net overall is net negative, right? If it's navy blue, that means there's low volatility, which makes perfect sense, right? We have a big event coming up in a half an hour. Everyone's kind of sitting on their hands, waiting for a reaction, waiting for the event. So that translates perfectly when you look at the GEX. There's just low volatility. There's if it was net negative, you'd have this red, and then you'd expect a little bit of action and movement. After 2 and 230, we probably could see this turn red. Even if we start moving higher, sometimes this can turn red. So keep that in mind. It's some people just look at the GEX volumes just for volatility notes, just to see are we in a volatile environment or not. I like to use it as to find the strike prices and see where the attractions are. Now, what do I mean by attractions? Attractions meaning that this high GEX is an area of liquidity. When you look at the absolute GEX, that's this value, the purple one, this is a high value or high area of liquidity as well. When they line up, we'll have confluence. Just like before, when we had confluence at a level here, when you have multiple data points lining up at the same exact strike price, you'll have confluence. So 545 is an attractant, and 545 also has a put spike here, which can act as support. So to me, that theory, if we did sync, 545 is a nice target. And then right after that, we drop off, and we have this put volume here. So that could also be a support. It's a target and a support. That's not to say that we can break it, because things will change after the Fed meeting comes out. But as of right now, this kind of makes sense. This is where people are looking, and so forth. Now, you see, the people that are looking up, there's not much liquidity higher. I mean, it's scattered about, but there's not a singular interest. Everyone's interest to the low side is focused around 545. They see what we see. They see this area to cover the gap and this confluent level right here, which we translate to right here. I was going to borrow a line, but why not add another one? We already have 100 on there, right? This line makes sense. Touch here, revisit and touch here. And another touch right here. So this 543.79 is a technical support level. This, the 200 MA, 545 right there. So as you can see here, technically, we move this. A nice flush down, cover this gap would make perfect sense. So now we're trying to weigh out our options. We have the perfect sense move, or it would make perfect sense in retrospect. Okay, we move down there. Yeah, that makes sense. We look at the quant. Yeah, move down here. Yes, that makes sense. And we have the GEX. It satisfied this high liquidity area. Yeah, that makes sense. You see what I'm saying? So now we're building a theory that this is not, guaranteed take out a second mortgage on our homes and play this level. It's just to let us know that this is a very possible level. It's still a coin flip to see what happens. Even if you know what the interest rate numbers are going to be, there's still the Q&A session that creates the coin flip. What's up, Amit? Will the code work for annual as well as after a month? No, the annual already has a discount built in. So if you get the annual, it subtracts the amount off of it already. So this is just for if there's someone who, whatever the case is, if you're just going for the monthly, that discount will work on the monthly. If you're going for an annual, after you join, reach out to me and we'll set up a meeting. I'll make sure you get set up and you're on your way. And there's plenty of people. I mean, once you start and get in, Amit, you'll look at it and you'll have, I think we spoke before. You can definitely DM me again and I can walk you through it. The idea is that once you join, you can join the quant chat, which is actually what we just spoke about here. Bryant posts in here a lot. All the other members do. And we focus on the quant material. Here's the GEX charts, right? Solus, my man. So this focuses on what we are talking about, specifically QTA material. In Gold Chat, this is more of a open forum. BK Brown's amazing. She posts such good material, and she explains it so well. She's so detailed and dedicated. It's awesome. This has more of general market talk. So use this room for that, but also understand that getting started and getting acclimated to using the charts, Quant Chat is awesome. If you're into spreads, check out the Option Spreads channel. This is where we discuss spreads, and we use the, Option Strat to explain it. Whew, I'm getting ahead of myself, but first you want to start off with the getting started. So there's keep in mind, there's tools on the Discord as well as the website. The website I'm on all the time, so I just use the charts that are there. If you are using Thinkorswim or TradingView, you'll come down here, you're going to click on the weekly intraday script, and it'll be an easy process. It's laid out for you right there. You just click weekly levels. They're updated Sunday night at 5 p.m., so you can start planning your week. And then every morning at 8:30, you'll have the intraday levels. It's real. You click. Great. It's now in the system. If you need a video for it, he shows you how to introduction. And it's what we're talking about today, the absolute GEX and the max pains. This is your little cheat sheet for that. This is how you can look back here and be like, oh, what was max pain again? Great. So I like to read this every time I see it because it's good practice for me. The max pain is the strike where the least amount of intrinsic value is for puts and calls combined by the end of the current week's expiration, right? This is not a plan that we are definitely going to hit max pain. A lot of people, when max pain first started catching momentum, you're like, oh, the goal is max pain. Not necessarily. It's just a value that you can use along with the other data points that are there. Does that make sense? So it's not particularly a goal, but it's something to incorporate in your trade planning. And it looks like we're going to come up and we're going to test this VWAP before the meeting. That would be interesting. To let us know if the VWAP can hold on its own regardless of a reaction, that's going to be pretty big. So the VWAP right now is at 549.26. We'll see how that happens live. And I think I want to do these more often. A nice live demonstration and application. I feel more comfortable in lives, and I just hate editing. That's also the thing. Bryant is like, he makes full-on production quality, award-winning videos. Well, he's in the industry, so that checks out. If you have any questions on any type of topic, you can come into the video section, and I mean, Bryant puts out some of the best quality work, I think, on YouTube. And the detail that goes into these, you're really getting an insight into the mind of a quantitative trader. So, what are we looking at today? Right, so the Fed meeting. All right, we're going to look at the VWAP here. 0.26, we're at it right now. We're breaking it. We're breaking it hard. We got to drip down. The minute. It almost, okay, another thing to keep in mind is that I use WeBull. This is something that I like to use in my one-on-one sessions. It's because it's just really set up and ergonomic for someone new, and it's a nice options table that I can explain everything. If you are interested in using this, there's a link in a what do you call it? I don't know, some kind of code in the description of the video. But the thing I bring that up is that the VWAP on WeBull might be a couple points different than the VWAP on other ones. I think it's just because one uses the mid as opposed to the last of it, and they just calculate it a little different. So if you see it just break the VWAP, it's not a all is lost kind of a thing. You know, you can see it dip down. So I use the VWAP as like a 5 or 10 cents on either side. It's more of a wide line rather than a specific line, if that makes sense. So the VWAP is holding before the meeting. That's interesting stuff. If it breaks before the meeting and we go into the meeting below the VWAP, that just adds more fuel to our theory of breaking down after it. Let's get back to the charts. So yeah, there's plenty of tools on the website side and on the Discord side. You don't need a separate sign-in for the website. It uses your Discord your Discord ID. Let's use this for now. So if you're just getting into using QTA, when I first started, when Brian first introduced me to it, I spent I think it was like a 3-day weekend going over all the data. And what's great about QTA is everything is archived, right? You can go back years with this data on the SPY, and you can see what happened on a particular date and how that happened. That's a little extreme. What we usually do is we'll look back to last week or see what the plan was and how it reacted before that. Get there, right? So we can look back. I think the 10th we were looking at for something specific, but I was able to bring it up and say, hey, listen, let's see what the quant said on the 10th. So this is great for one-on-one sessions as well, and it really helps solidify how it is, because looking at the past and what the reaction was then really helps us understand how it could be affected in the future. So we're making the hypothesis of down. This makes sense, 545. If we were in the market for a little frisky business, maybe a 546 put, 65 now 52 cents. This is delayed because I'm not paying them for it, because I trade off of WeBull on my other accounts. So we would get a lotto for a couple points above it. Now this is not trade advice. This is just something. I'm not even going to place this trade. I'm just saying in my head I'm going to make 50 cents as the target, and then we'll see what happens after. But there's always two sides to a coin, right? What happens if we have a good reaction? Well, I believe, Doc, I did all my research. I want to play the upside. How do we do that? Going above here, the only area that we have is resistance is the 2 sigma line, 556.41. When this bounces right off of that line, it's a little bit of exciting for me. It's like, ooh, look, it touched the 2 sigma line. It's like touching the outer barrier of the furthest of like a galaxy. You're like, oh, I'm on the outlying planets. I'm sorry, my nerd is showing, but that gets exciting to me. If we break it and we're in the 2 sigma outlying area, it's like the wild, wild west. Anything you go. You can go higher, you can go lower. If that were to happen, we look at the chart on the SPY, and we have to rely on a technical analysis. This is the next level, 556, and anything higher than that, 559, up to there. In fact, let me just put one more in here. This is why I have so many lines. Because I'll put a line or two, and then when I zoom out, there's a million of them, and I have to get back to it. So you see how it happens? You see it how it happens? So this is what we're going to say. We're going to say, okay, if we go higher, we're going to look at technical charts. 556 would be the next one. It makes sense, too, because we look back, it's a gap here. We shut off the extended hours, we could see. And we shut off the view app. Boom. Boom. Gap. We're in it right now, actually. Boom. Right up to here. And there's a nice red. So in other words, you're saying another line. I'll remember to erase these after. So 553.50, say, and then another one above that. So depending on how strong the market reaction is to the Fed, we could see one of two of these being touched. I mean, if it's I can't imagine going much higher than that, but in fact, let me get. You know what? I should leave it there. Be a little more conservative. Okay, good. So this is the opportunities that we have. We have a closure of the gap down to 544, say, and if we have a good reaction, we have a couple resistance levels to look at. And if we were playing your basic straddle position, you can get a 554 or 555 call, and that 545 put, and you can straddle it. I'm not really into doing that. I like to like spice it up a little bit. In other words, if okay, let's say I would be set up. If we do go down, we're going to go down right away, and we're going to hold here. And then once the market settles in and says, you know what, it's not that bad of a deal. It's not that bad. His tone was bad, but let's dial it down and say, you know what, it's just the tone. The market will be fine. We'll see a bounce off here to go higher. So what you could do is you can play a play to go higher throughout the week, but get a put as a just in case we drop and we don't see that. It'll be a nice cheap hedge. And from the looks of this, if we have a bad reaction, this would be a nice move down. I wouldn't play the move to the top side because of that resistance. That's just me, right? We do have that gap there also. So I'm on the fence of it. On this case, I'm just going to watch from the sidelines because talking this out loud is not enough for me to get confident about a trade. And that's really the essentials. That's the foundation of trading with QTA, right? And I say it's kind of a cheesy line, but it makes QTA makes good traders great and great traders more confident. And I'm trying to flip that up a little bit because I think everyone can be a great trader. It's just that confidence. We need to have that extra level of confidence. And I was couple people that reached out to me. They said, I've been trading for 3 or 4 years. I've been trading for 10 years, and I'm losing my edge. I just don't feel confident in my trades anymore. What am I doing wrong? QTA could be that little ingredient to get you back into the confidence. I mean, if we're looking at these levels, I've been looking at these trading actively now for 4 years, from 2020 to now. Actively meaning all day, after hours, wake up in the morning, 4 a.m. You can like get desensitized by looking at charts constantly, and you just you lose your edge. When I got introduced to QTA, it was like a breath of fresh air. It was like, okay, I can see now. I can see those levels, and they're matching up, and my levels make sense again. And it sounds cheesy, but it was true. It adds more confidence to what you are already thinking, and if it disagrees with you, that just adds, it spikes your devil's advocate, if you will, like to say, okay, well, if that's wrong, what am I missing? And it forces you to look into, maybe I did miss that. Okay, maybe I'm a little biased on this stock. Maybe Crisp is not the stock that I thought it was. And then you look at levels and you say, oh, you know what? It does look kind of promising. Great. This is what I'm talking about by giving you more confidence. It's like having an experienced quantitative or a quant, an actual person next to you saying, you know what, I see what you're doing there, but my levels suggest something different. And you can overlay those, and I use the analogy of having a lens. And we'll have one lens of one lens of technical analysis. We're looking at something through a technical analysis lens. And then we overlay the quant lens on top of it. And now in our brain, we're saying, okay, this is a level, and that's a level. Okay, great. I've seen that confluence in my brain. And then we can go to the GEX level and say, you know what do we see here? The gap going to 554, say 554, and then another one at 555, 556. So let's see if there's anything above us on the SPY 0 DTE. And then we're going to look at the weekly also. So here's 552. That checks out. And then nothing really spikes. Up here closer to 560, I mean, anything's possible, but there's not really a spike that draw. This call spike in here is kind of the first thing I would look at. If we don't break this call spike, it just adds to the theory of going down, right? If we break this call spike and hold it, this is an attraction, and then this is a wide attraction. I would watch these. If they spike afterwards, and it becomes more of an attractant. But for going higher, we're just looking at the technical levels. 550, 570, we can actually make that 556. If I can get... Yeah, there we go. Perfect. So we have our range, and I'll actually make a little... This might be overkill. Right? But that's our range for the Fed reaction. I may be a little too far down. And this is something that I was practicing when I was live with another organization, we create ranges for the day. Ranges for the day, usually we use the overnight levels. We say, okay, where did we visit overnight? This seems to be an outlier here. This is pretty much just excess from yesterday's. This is an important level. I would reach out, and if we spike, that would be a level. That would be the range for the day. This didn't really give us any range. It just kind of sailed upwards. So we look at quantitative methods to give us the range. And those ranges were the max pain, the 2-day view app, the intraday, things like that. I hope that that's sitting with everyone. And then on top of those levels, we overlay a third lens, which is the sentiment. So we have the levels, right? We have our rigid boundaries, if you will. And then in those boundaries, we want to say, okay, is it more likely that we visit this boundary or more likely that we visit that boundary? And if you have data that supports either way, you have a case. You're building a case still, and it's never going to be 100%. We're like, okay, this is what's going to happen 100%. But that's the beauty of it. That's why I love doing this. That's why I love waking up and say, what do we have today? Because literally anything can happen, but it's finding that edge, right? It's finding that little extra bit of data that will say, this is more likely to happen than that. And as long as we can understand it and accept the data as just data, not signals, right? This is not guaranteed. It's not guaranteed that we touch 545. It just looks really juicy. It looks really nice, right? This long, extended GEX volume, negative GEX at 545 with the absolute GEX is drawing us down. So now we're coming up to about 15 minutes. 15 minutes to the Fed meeting. We have a time for one of my favorite areas of QTA, and that is under the options area, and that's the advanced GEX. Amit, do we also use these tools for the core list of stocks that you monitor via the app? Yes, for sure. You can use, this is perfect question for what we're getting into. I like to follow, I came from the biomedical field when I was with a small group. It was not an official hedge fund, but it was a small group of traders. We were each assigned an area, and mine was biomedical, and I lost a lot of hair, and I lost a lot of sleep during that time. It's bananas to try and follow any type of biomedical stock. And the ones that are very low in the area, so look at this one, Coherus. You have option table, right? So there is data that is here. But look at the open interest, 200, the volume, 0. This is not a healthy options market. A derivative market that has no volume is not something you want to play with as a commodity exchange. You can buy and sell puts and calls for the intended purposes, right? If you want to sell puts to own the stock, go ahead. But this does not have enough data for us to use it more successfully, as opposed to when we look at the SPY, right? Look at the volume here. Tens of thousands, hundreds of thousands of volume. Look at the open interest, great open interest. And when we plug in SPY here, we'll get all this data. If we had plugged in CHRS, we'd get limited data. And along those lines, there's mid caps, there's small caps, there's large caps. When you plug them in here, you'll get all that data. So let's try, for instance, like, you lost audio. Oh, no. Oh, no. Check in. Check. Are you sure? Can anyone else hear me? How about now? How about now? Can you hear me now? No way. I'd be so upset if we lost audio. I'm getting that it's receiving. Good now. Okay, cool. I was ready to throw this laptop out the window. I still should. But sorry, laptop. Did you overhear me say that? So let's look at is a little known stock. You might have heard of it. I think they make pastries or treats. I think they're really successful around Halloween time. Oh, is all the time good? Okay, cool. Thanks, guys. So Tesla, right? Company we've all heard of. On the right here, there's the expirations. This is every expiration that's on the option table for Tesla. This is the data that it gives us. This we'll get into after the Fed meeting. This is how you can plot your own trade. But for instance, if we're looking for this Friday, we'll click this. This will give us the data for this Friday's expiration. Right what we were talking about, but different. You know what? Since we're talking about SPY, let's use that. Why complicate things? So this is where you would enter your ticker. So when someone says, oh, is it in the QTA universe? Why aren't you guys covering it? No one really ever says that. But I'm saying if that question would come up, it's because there's not enough options interest. There's not enough volume in the options market for that particular ticker that would give us the information. You need an options table, an options chain for any of the GEX or the quantitative theory. I'm sorry, not the quantitative. This quantitative information, this is math. This does not come from the options table. This is proprietary. This comes from just cold hard math. With the GEX, that comes from the options table. Sorry to clear that up. Had to clear that up. Sorry. So if you're wondering if it's in the QTA universe, just come in here and plug it in, and you'll get that. So we're running close to it. I want to get through this. We're going to find what's going on for this week of SPY. And this is the difference when you really get into finding the specifics, as opposed to using this. This is the snapshot. Every 15 minutes, we get a snapshot of what's going on with it. This is the 0DT, and then the other one, the SPY Weekly. If we bring up the SPY Weekly, we can get more data that's specific to the Friday's expiration. We still have a lower, it says here 540, we still have a lower outlier. That looks really good to me. The spot price is below a call spike. We have the max pain as a draw here, but look at this. His absolute value is higher at 552. That sounds familiar, right? That rings a bell. 552. That was an area, and look, that all that high interest is there. That high GEX, 552. So there is a case for higher. There's an attractant for higher. Not to say this will happen right after or because of the Fed meeting, but remember how I was saying you could play the immediate dip and then play the bounce after that, or you could place them together at the same time, and you can have yourself a calendar or a diagonal, or a makeshift calendar diagonal. You could play, if we do fall, we'll fall right away. But if we do climb, we'll climb over time. So if we get the 0DTE for the fall, and we have that's covered, and if we have the weekly expiration for the 552, one covers the other. So if we do go up to 552, that weekly will win and cover the expense of the put here, because this 0DT put is going to be real cheap, right? What did we say, 50 cents or something? A win to that 552 and above, or anything, if you play to the upside, it should cover that. And if we do climb, you know what I'm saying? So you don't have to play if we go up or down right away. We can play if we go up or down today or tomorrow or throughout the week. So just something to incorporate, and that's why I like to overlay, like speaking of another lens, the 0DTE with the weekly. It gives us different information. So now that we set that up, we have the weekly, every expiration, today, tomorrow, and Friday on this data. It's combining that for a specific tailored report. This is our tailored GEX report, and here's where the fun really starts in. So remember that absolute GEX value was at 545. This value is not a steady pinpoint value like max pain. There's other values that lurk behind here, and when I turn this on, you'll see it. So right here at 545 is the strongest, but then the secondary is up here at 550, right where the price is now. If we had a secondary higher up here, say, and it was just below it, that'd be more of an attraction down. So you look at the primary, the secondary, and sometimes the tertiary. The secondary and tertiary are pulling us up to 552, which would land here. That checks out from our theory earlier. And also down to 545, this outlier of the red. And see here on the weekly, it's net negative. The GEX, there's more volatility on the weeklies, or using all three expirations for the week, than there are just using today only. So you want to kind of shuffle between all sets of data that you can get the most of it. And if we turn on so now, okay, let's start with the put open interest. If the put open interest is around 545, that just adds to our detective case, right? Let's see, let's try it. Boom, here's a nice spike right around 545. There's other ones here, secondary. No, this is the primary here. Strongest one's 535. That might be a little much of an outlier, but the idea is that the magnets, there's more open interest down. If we're going to look at the put volume, this is going to show us where support levels are. This is just a mess. This doesn't help us at all. We're below some support here, and we're below the first support here. But, okay, I'm sorry. This does help us. The 545 is the highest. The 545 is the highest. So this kind of solidifies our thinking that 545 is an attraction and 545 is a support level. Let's just, for kicks and giggles, see what call open interest is. So let's say this is our high level here. If call open interest comes highest around here, this 552 just became more interesting. And it already is really interesting because of the way we looked at it. So let's see. Call open interest. Boom. High, debatably of the highest one right here at 552. But look at this. The other call volume, debatably the secondary or the primary, is at 545. Which is bananas. And how do you wrap your head around that? It's just, that's what it is. You can then assume that this would be a area of interest. This is already being satisfied because it's above it, but there's something to get in your head. Call volume, let's see, 552, just below it, 551. So right above where we are now, that makes sense. 551, that barrier, the resistance. People are playing the idea of breaking that level to get that in the money. So that you play the 551 call for the price action to go to 552. If you have a target of 556, you want to play the 555, 554. You want to get your strikes as the price action passes by. Right? You don't want to have a target. All right, we reached I have a target of 556. Hey, we reached 556. Great, I'm out, close it. You make your most money as the price action passes your strike, whichever strike you choose. So if we get to 553.50 and the price action goes to 556, all that good theta, that good juicy theta will be ramping up our gains as it passes us by. Right? And we're coming into 2 o'clock. We have 6 more minutes. I think we're going to pull it up on the side. I don't know if we're going to broadcast it. I just want to watch the reaction. And I used to wake up early. I used to watch the CPIs and all the reports. But now I don't need to. I can just look at my charts. I was the guy that had CNBC on all day, all night. I would wake up, put it on. I would watch pre-breakfast squawk on the street, squawk brunch, squawk lunch, whatever. Watch it all day, and then I would just keep it on all night. I had CNBC almost as my trading tool. And then I got into things trying to follow the news. If you're trying to follow the news, you will always be the second one reading it, right? In my time at Morgan Stanley, I was in publishing. So I would take the reports that came directly from these analysts, ones that we follow and we get their views on. I would get their reports, and when it came to our department, it said for internal use only. What does that tell us? It tells us that it went around to the whole building, all the buildings, all the departments, and then came to publishing. And then it went to how to translate that to go to the vendors, and then the vendors said it to their subscribers, and then it went to the eyes. So there's such a disconnect. Now, back then, that would have been a good, 30 minutes, right? Now we're talking about 30 microseconds. Someone would get information, and if it's like 30 seconds faster than anyone else, they have the edge. We don't get that. We will not get that speed of reaction. So to trade on just the news, especially for short-term investing, it's going to be probably a losing battle. I trade the reactions. News is great if you're into the long-term investing, right? If we're looking at Tesla to invest, for the next 10 years, we want to know what's going on with Tesla for sure. But to trade something like the Fed meeting, we don't even have to watch it. We can play, and then as it comes out, we hear, oh, the Fed meeting was this. Great. The Fed can give us a 5% interest hike, but the market reaction is what we really care about. It doesn't matter the rate of itself right now. It just matters the reaction. If we have a bad reaction, we come down, we find support. Great, we close that put, and then we let the call ride. If we're going to use that 0 DTE put and the few days out call. I will call that person back. Don't they know it's Fed meeting? Who's calling me right now? So does that sit with everyone? I mean, it's not something that you're going to pick up perfectly right away. Just like anything, screen time is the basis for all learning. Practice makes perfect. But we'll go over some more after the meeting. But keep in mind, if you guys are on the fence about joining QTA, use the code DNOW30, and we'll give you 30% off your first month. And when you do join, reach out to me, and we can go over different things, see what you need help with setting it up. But there is really, the getting started page is awesome. You can just go down as a checklist and find that out. I mean, follow it, and you should be good. Where's a water? Somebody get me a water. I'm totally kidding. I don't work with people, and I would never talk to people like that. Sorry. So we tested the View app before the Fed meeting. You can make a case that we broke it, and we came back above it. So this would be a little weak, that the pull is more than the support. We're not, I mean, that's just like, different theory, but we're going to be looking at this as our first boundary. You know what? Speaking of CNBC, let's put on the good gang to find out and get it live. All right, we don't need this any longer. I keep thinking this is the after hours, but I forgot I made that box. Oh, the Olympics. I love the Olympics. Okie dokie. And let me pull up something to go over with after. Breaking news.
But changed its statement in a way that may lay the groundwork for future rate cuts, though it doesn't necessarily.
Unchanged? Is that the official? Unchanged. Okay, so the rate adjustment looms for another session. There was no change today, unless that's the already, yeah, 505 to 550. Okay, good. Now it really comes down to the tone of the Q&A, tone of the meeting. If there had been a rate hike or something extreme, we would have seen that. I would have expected some move here. That's a little odd. I mean, having the rate hike unchanged could be unexpected, right, for some people, but I guess not. Perfect. So then we can just dive into explaining QTA even more. Let's see. We were going over this is my favorite part of QTA. It's because there's so much data that you can toggle at your fingertips and then find out more confluent areas. So we did not have that dip down yet. So our 50-cent put is still in play, and we had that 552, however you want to play that, as a target above. I'm not sure if I really like that. I do like the 555. 552 is kind of, I mean, if anything, we'll come down, revisit. I would like to, if we come down, revisit, debating, that would be the first one. That is obvious. I'm not sure why I didn't have that on there. But see here, we have this, we're building a little bit of a cup and a handle here, or you can make the case of this is the cup and then a handle here, or this was the cup and that's the handle and this is the, I don't know. This is the problem with technical analysis. I can look at this and in 30 seconds, I'll have another idea of what I'm looking at, and then come back 10 minutes later and have a completely another idea. And this is what happens in my brain. I get tossed back and forth on what I'm looking at. Enter QTA. QTA gives us that cold, hard data right here, quant chart. This is telling us that that's a hard level, that 551 intraday and the sell zone. If we kind of hug this line here and don't break it, there could be a good case that will drop down to 545 tomorrow. I'm assuming there's got to be some type of movement during the. Jerome Powell always seems to say something that perks people's interest, either for the good or for the bad, and he's not like a. I mean, the case could be made that he's people love him, people hate him. That's great, but his job is pretty hard. You know what I mean? He's trying to ease the. We're not going to get into economics 101, but there's something to be said about the way he delivers his tone that I admire. I mean, for lack of a better word, it's very delicate of what he's doing. So I'm not pro-Powell. I'm not anti-Powell. I'm just stating some facts. NVIDIA's been looking good today. How about we look at, because we got a few minutes before they, so Fed continues to say no cut until it has gained greater confidence inflation is moving toward 2%. Okay, great. So things are looking good. So if we look at, okay, let's not look into NVIDIA just yet because we're waiting on the target. Let's zoom out. When in doubt, zoom out. I mean, wow, my God. Look at this run. Run, breathe, run, breathe, run. I mean, it does make sense, right? What we're going to be looking for in technical analysis terms is no new lower lows, right? You could see here, this was a breather, but it didn't make a new lower low. It made a new higher low. We went up. This is a new lower low, right? New lower low. We make another lower low. My gaze is going to start looking down to below 500. This is a really nice support, though. I shouldn't say that. 520, 521. This is really heavy support right here. So whatever happens in this mishmash, or mizigash, as they my friends used to say growing up, you can have anything happen here, but as long as this support area is holding the 520s, it's still a bullish market, right? This might just be an extra breath of fresh air. Holding this gap would be an even more bullish sentiment. But let's zoom in and see what's going on. So the VWAP rules the day. We went down, we tested it, and now it's holding. We start making a new higher high, then we're into something. And I'll put these back on. Meaning we break here. This is your break and retest. Break and retest example. Usually you look left for some type of resistance, but there isn't. Maybe here. Yeah, so meaning a break and we run into 552.74, come back down, find support just to go higher. That would make sense. If this holds as resistance, downside still in play. Break, retest higher, or held as resistance down here. I love how I went on this whole rant about, yeah, I don't follow the news too. Where's my remote? Where's CNBC? It was just easier for me to pull it up live rather than Googling it on another screen. But here, this is what we're talking about, is we're looking at technical analysis. I'm on this page, but we can easily still just revert back to the quant chart. If we break this, we go higher to 556. If we don't, we go down to 545. Just like we were talking about here. If we break this, we go up to 556. If we don't, we go down to 545. Right here at 547. You see? So it's just giving you more confidence. And if you're not good at technical analysis and you're good at math and you're good at good hard data, then all the better. Perfect for you. Let's see how we're doing on the SPY, specifically for today's expiration. Is that still on? Yeah, we're going to get that. All right, so we unchecked everything, and we just have today's 0 DTE. So now that we have it unchanged of the interest rate, the only variable of the day is the Fed meeting. So now we have red, net negative. And we'll see if that changed. It's not out yet. So another one's going to be out in 7 minutes. We'll come back. Remember, the blue, the navy blue, means it's net positive. Right? Net positive environment. The net GEX positive. The red means net negative. 545 is still looking pretty good. Is absolute GEX changed? No, it's still primary right here. Put open interest. Solid 545, right? All that is this 552. We have this gap here, but if this is filled at 552 touched, then we can play to the downside if this does not increase. If we start moving towards 552 and we see these GEX levels grow higher, it's just paving a road. It's paving a road to go higher and higher and higher. But if we find resistance at 552, which we've mapped out on... Where was that? Let me borrow this line. Right here, right? Touch, broke, did not revisit until now. So, building on what we were just talking about, if we do break, we run into 552, we come back and we retest this level and it does not hold. If this level fails on this retest, then we have a nice excuse, if not a better word, or a nice play to the downside. Wow, look at that candle. Ugh, that is interesting. That is, oh man, we got a Fed thing coming up. I don't know what's going to happen here. But this tells us higher is easier, right? This is a bullish candle. We dip down and we come right back up, but we close right by where we opened. The next one is still an indecision candle, but green. So now, if we were just playing the candles, we take off everything else. Playing the candles in the VWAP, higher looks easier. Right? We use the indicators. This has not crossed yet. We're just at the zero barrier on the histogram. But the RSI is pretty high. RSI is in the 70s. It's been here all morning. Still can go higher, right? I mean, let's check recently. Recently, RSI went as high as 74.85. But the RSI can go as really into the high areas and stay there. Keep in mind, the RSI is not something of a signal where, oh, we're above 70, that's it, we're going to be coming back down right away. This can be above 70 for a while. I mean, case in point, just look at NVIDIA. NVIDIA was above 70 RSI for most of 2024. It's just letting you know that it's more to be on the lookout for coming back down. To be honest with you guys, I was actually hoping for more of a reaction of the Fed meeting. I was looking for some type of reaction so we could play it. But with the unchanged, hey, sometimes no news is good news. I'm Gary Gnu. What else can we go over? This is why I like the absolute GEX, because all the little intricacies, all the little data points, you can get updated on and compare it to your trade theory. Let's see how the absolute GEX is holding up. This is gaining. This is gaining a little bit here. This is still primary. 545. Put open interest. Still, yeah, huge, huge. 545. Keep that in mind. Okay, now we're gonna do what we were talking about earlier, is use different lens. So now I'm gonna get everything off, but except just the Friday expiration. Before we used today's, tomorrow's, and Fridays. Now we're just gonna use Friday only. I'm gonna layer that over to what we were talking about, in case we want to do a Friday play. Interessante, right? 552 absolute gex and the highest gex on the board. Is there a secondary one? 545, right? Secondary. Put an open interest. Let me guess. Is there a favorite number? No, it's even lower. 540 to match up with this high gex. Call volume is really good all the way up to 560. Put volume down to 535. So now we have a range here, right? The put volume down to 535 up to 560. That's a wide range between the two volume spikes. And call open interest. 552. So how I would play this, I would wait until we visit 552, make a decision there. That's it right there. Patience is a virtue. You know, imagine going up to the home plate, and the normal rules of, all right, you get, you know, a certain amount of pitches, and then that's it. Here, we can wait. We can take on every pitch, and there's not a count. There's no balls. It's that we don't get. In other words, no called strikes. We don't get penalized for not taking a trade. So it makes more sense to hold off and not take a trade than it does to take a trade and not be fully confident about it. Remember, we call it's day trading, not everyday trading. And it's day trading, not all day trading. So we don't have to have any cash neutral is a position, right? Not in something is a decision. You're making a decision not to get into something because there's data telling you to wait for something. So a hold off that 552 area is a play. Waiting here is a play. If we don't reach this today, if we go sideways into the close, all right, great. We don't make a play today. We can make it tomorrow. If we visit 552 overnight and we can see we open down, it's okay. We missed it. It's not the end of the world. There's going to be another time. We want to wait until it's our pitch. We have the advantages on our side. We have time. When we're not in a trade, time is on our side. When we're in a trade, time is usually working against us, unless you're into selling puts and calls, and that's a totally different style of trading. It's a totally different type of flying altogether. So what we want to do is find a play, find a theory that works, that literally it works out to be if this, then that. So our play right now is if 552 hold, we're going to look for a break of this. Hold here, break this, this happens. Hold here, this happens. So if this, then that. Or if this, then that. And then just wait. And just wait to see when that happens. Same thing with getting out of trade, right? If you're in a trade, you start plotting your exits, right? So if we were in this trade now for a higher, if we get here, you might think of closing some trades out. We made this move. That's a bonus. We take the profit and we leave the rest to see if it holds here. If it fails here, then we get out. That's our stop loss. We come back to where we visited. Smart play is if we got in at the VWAP hold, we can then sell or close the position when we make a new high, and then close more of that position when we reach this, and then leave this to see if this holds. If this doesn't hold, then we sell it and we close the position and we're totally out. If this does hold, we have, say, a third of our position to go higher. A lot of people come into this thinking, okay, I'm in here, where's my exit? That's the play. I'm in here, that's my exit, there's nothing in between. But if you talk to traders that have been trading, day trading for a long time, they'll tell you that you're in three positions. Imagine a car with 3 gears. You're either neutral or building a position or closing a position. You should you should never be in this like all your money is in and all your money is out. It's not a football game. It's not you're betting on the Giants to win. If they win, you win. If they lose, you lose. There's times in between to take profit off the table. So you should always be. I tell people, think of it as you're at a poker table. You're either putting chips on or taking chips off. It's a constant state of flux. Obviously, if you're more long term, you do the same thing, but in a slower path. So you can get into a position, say we got into a position here at 493 with our target of 529. We're in here, we're making our money. We reached our target, we close it. We keep some because we want to see if this support holds. We keep some, this support holds, great. We break this new support, we can decide to take more profit. And then we let the other profit ride. See, so it's always beneficial to get multiple contracts if you're playing options. Or if you're playing just shares, you get multiple shares, you close them in pieces, in chunks, or singular, however you want to do it. But the idea is to take profit a long way so you start getting an average of the move rather than a specific point. So a lot of big issues that people have is like, oh, I always get in too late, or I get out too early. This is the way around that. Scaling in and scaling out is the way around it. You know, you buy two contracts at a time, 2 contracts at a time. We hold here, great. Full position in, we take it for the ride. If we don't hold here, we're only out 1% of our full position. Does that make sense? I mean, I'm starting to get into a specific, lesson plan here, and I apologize for that, but that's the idea. So by using that, we can apply QTA to find those areas, to find those levels of primary targets, profit targets. Just like what we did with SPY on today. Our profit targets would be one here, and then the second one here. If we were playing down, we have one target here, second target filling the gap, or second target filling the gap, third one coming down to find support. You see what I mean? So constant state of flux, adding into a position or taking off. And let's see if anything's changed on the SPY 0 DTE front. $5.45 is still the winner. Oh, what is this? $5.50 now, right? The absolute GEX, wasn't that $5.45 was the biggest one? Now $5.50 is the biggest one. So people are, well, I shouldn't say people are, but the high liquidity area is now shifting to $5.50. This high GEX, I don't think that was there minutes ago, right? And look, this is the beauty. We can always go back and check. And let's just double check. We're on 0 DTE for today, right? And 550 is about 30 million. This was 550. It was at 10 million. So 550 is gaining in the GEX arena. So you see how that information can change throughout the day? And that's why I like the advanced GEX. These are great. The 15-minute snapshots are awesome for a glance, and it's really great because it's a trailing receipt. It's a tape. You can look back and see. Today is not a good example because it's a Fed day, but you can look back to see what areas are gaining or what areas are lessening. Might not be the perfect English words to use there, but that's the idea. You can look at, there's the tail of the tape, right? You can go back and see perfectly. So I guess the absolute GEX was always at 550, 552 it was at. So now it's at 550. My bad. So it's moved down. I apologize. I thought this was the highest. So maybe this is actually increasing. I've been bouncing around from the Friday to today. Interesting. So the absolute GEX was never at 545. It was always at 552. Silly Doc. What are you doing? We're going to be watching this. We're going to be watching this absolute gex. If this starts to get higher than this, our 545 pull is even best. Now we're breaking. We should be breaking this. Not should be. I shouldn't say that. We could be breaking this. And at 552, that would be our point of decision. In fact, let's go ahead of ourselves and look at 545. Puts. Puts. Do you like puts? I'd put a put. Okay, so 169. That's a little out of my lotto range, but it's something, you know, you could play in your head. If a lotto, meaning something that it's money that you, it's like buying a lotto ticket. It's high odds, but low risk. It's a low, like, you know, a lotto ticket's $1, but you have a chance to win millions. With this, your lotto ticket would be 170, but you have a chance of winning, you know, close to 4 bills and maybe even higher. What a lotto is that it's an educated guess. It's an educated gamble. I don't know, a lot of people in here, you might know what a lotto is, and I apologize if I'm not trying to be condescending. It's just, I don't know who's going to see it. So a lotto is something that it's money that you were okay of losing. And that's the idea. So what else can we do here? Let's see. I was looking at Tesla. I don't know if we have... Yeah, we got plenty of time. What am I saying? You guys want to look at Tesla? Is that a silly question? Of course you want to look at Tesla, right? So this was from a class 710. We want to get to today. Let's have a plan of action for Tesla. Okay, really good, really good. This is our second time visiting the sell zone. But look at this pattern, right? Look at this pattern. We got a shoulder, a head, kind of a shoulder here. This is a bullish pattern, even if it's not a textbook inverted head and shoulders. From experience, this is a bullish pattern. We're knocking on the door. We took a we stepped back, took a running start, ran into it again. It held, but we didn't drop back down. We're beating on that door. We took a little bit of a back up. Now we're beating on that door again. A break of here would be okay. A break of that sell zone would be okay. Also a rejection. But look at all the ones below. We have the max pain as support. We have the 2-day VWAP as support. We have the intraday support. If this gap were to be filled, that intraday would be a good entry point for higher. If this is broken and that's broken, entry point right here. We close the gap, bounce off of 524. If we look at... There it is. There it is. Now, if you thought SPY had a lot of lines, wait for you to get to Tesla. So this was the trend that we were in. We were playing the last couple weeks, right? Came in, wanted to retest this. We did not make it back down to here. Instead, now we made back down to here. So we're now testing this support again. It held, and now we're coming back up, and now we're testing this resistance. Like that. This resistance is holding. That is ugly. What am I doing here? Okay. At 236.72, that would be a decision. 236.72. If we kind of take all week to get there and this holds, the play is down here. This is what we're going to gain. This is the clues that we gain from technical analysis, right? We come up, we break. I think we can get rid of this purple line. We come visit this area again. If this holds, we come back down here. So what we're going to be looking for, well, let's bring up the quant again. 243 is a 2 sigma. 243 is right around in here in this space here. That doesn't really line up with anything. We'll look at more. It's 236.72. That's the top of the sell zone. Top of the sell zone. That's a little bit of a confluence there. And now, let's say if this holds, our theory is that we revisit down to, I would say down here, right? Does that make more sense? 220. How does that hold up here? What's that 220? The midpoint. Cover the gap, go through all those. 220. What's our time frame? Probably into, play it safe, into next week. Could visit here, be a little tight though. So 220, 219. Oh, actually, here it gives it 219.80, 219. Is that line up? 219.80, 219.40. Okay. So we have confluence here at 219 and change. See how that happens? 219 and change. Now what we'll do is we'll go on to our GEX. We'll take a look at the snapshots first. Scroll, scroll, scroll. And in true Tesla fashion, it's skewed, skewed to the upside. Now, usually there's a nice balance on it. I just make jokes that everyone thinks Tesla just goes up all the time. But 235, highest GEX, call volume spike, and absolute GEX. This is the outlier. This is for this Friday. How does that line up in our chart? 235 was that the top of the, yeah, top of the sell zone. Perfect. So we are in that pattern. We are waiting for this to be revisited. And if you're fast, if you got quick, fast hands, and you don't, mind the small moves, let's see, does this look, a break of this VWAP and a hold could be grounds for that 236 area. If this gets rejected, that play is out the window, at least for today. So if we were playing Tesla, if we're day trading right now, we would wait to see what happens at this VWAP. Right? The indicators say it makes sense if it's broken right here. We're holding above zero barrier on the MACD. The RSI has plenty of room to go up, also has room to go down. We're at a true inflection right here. This is what we could expect. A break of the VWAP and then a retest of it to go higher. And I chose that area like that. So if we're day trading Tesla, we want to use the levels to our advantage. We're at the VWAP now, right? If we break this VWAP, you could start thinking of entering a trade, right? And we'll do this in our head. We want to get, say, 10 contracts. I would get 2 contracts right here. We move up. We'll hit this resistance. And as we come back down and test it, we can get into more. A cute thing that I was going over with someone recently was a double play. So this is for people that, if you have a cash account or if you're above the PDT and you can get in and out of trades throughout the day and you're not restricted to holding overnight. A new interesting one that we would kind of batting around was get into a play. So we say you have 10 contracts. We'll get in with 3 contracts here. Play those 3 contracts. Sell them or take profit. So if we had, make it 4, right? Make it 4 contracts in. Sell 2 of them here. Hold the other 2. So now we have some profit. Hold the other 2. And then get in with our remaining contracts through here. So we'll buy 2, sell 2, buy 2 more, and then on the break of here, buy more, and then maybe even on the retest of this, add more positions. So it's a more fluid. It's a less rigid. I'm moving my hands right now as if you could see it, but it's a more give and take It's not a, hey, I would like 10 contracts, please. Thank you very much. Okay, thank you for that piece of paper. I'll see you when I reach my exit. It's more of an active participation. I get 2 contracts, I close 1. I get 2 more, and then I close 1 more. You know, it's constantly, you know, in a state of flux. That's the only way I can describe it. But for all intents and purposes, for the basics of scaling in and out, we buy 2 right here, and we're going to be expecting this to hold. If we don't hold this, and we get something like, no, sorry. If we get something like this, right? This is a possibility. And this is why we get those 2 contracts now. So if this does not have resistance, we can then get more contracts here, but we already have 2, so we get them at a discount. Our purchase, you know, our main primary move is if we make a new high, then we're in it. But if we're getting a little cheeky with it, we can get 2 at this hold so that when we get our real position, we have them on a discount. Our average will be lower. Does that make sense? So 2 contracts here, a break of it, more contracts, whatever your number is in your head to go that way. And when we're looking at the quant chart of it, this is our goal. But look at this. This level is that we're waiting to break. This is a confluent level in itself. You have the sell zone specific line, and you have the VWAP line. A break and hold of this would look real pretty. Coming back to this on the 31st of July, looking back, we're going to talk about a break, a retest, and go higher. And we're going to hit refresh. The quant charts need to be manually refreshed. The option volume charts do not. It just works best to keep archived data. So just so you know, if you're staring at the screen, it will not update automatically. You have to do that. It's because it's cataloging all the data, and it's just easier that way. That's from what I understand from the development team, and it's just fine anyway. So if we zoom in here, we look at it like a little bit of resistance, a little bit of testing, a little shucking and jiving going on here, a little politicking. But we are waiting for a break of this resistance and then challenge this one. The main thing is that this VWAP holds. Right? A loss of this VWAP will open up potentiality for here. So now we have a potential channel to kind of better describe what I'm looking for. If this fails, then it's easy just to visit right down here. Like so. So number one thing that when I run into friends or family and they say, "Oh, which way is the market going to go?" It's like, I don't know. You know, let's look at the inflection points. I'm all about finding a level and then acting on that level at the level. If we just came on here and be like, you know what, SPY's going to go down to 228. Let's just get in here and get puts for 228. It could just travel down to this level, and that's great. But what I do is I try to look at the next move. So if we do visit here, what's the next move after that? This is just getting ugly now. I was never good at art, but I can draw lines forever. Forever. What I try to stress on is that we don't want to find or try and take a guess at where we're going. The market's going to go where it wants to go. What we're going to try and do is find the potential paths of the market direction and trade accordingly. So since we do not have a clear direction here, this is actually a real bullish setup on Tesla. We have this spike up and a hold of a level. We're gonna hit this with the 50 fib in a minute. The Fibonacci. So lots of indecision happening right around the VWAP. If this 50 shows us right around, if this is the 50, we've already touched it. Let's just, instead of speculating, let's just hit it. Hit it. Just a bit outside. Now you can make the case that, oh, you don't use the wicks, you just use the bodies. Cool. So now that 50 retracement is like so. And I use the yellow lines for 50 retrace. And now we'll slide this over. I keep calling it the 50 fib. The Fibonacci is what Bryant would call a QTA approved tool. The Fibonacci and the RSI are tools that work very well with QTA. There is plenty of videos where Bryant goes over smart usage of the Fibonacci. The way I've learned it is just to find the new higher low to the end of the run, and then in there find the 50. You can make the debate where you can draw the 50 to the body of the candle rather than the wick. However you feel comfortable doing it, that's the right way. In my head, there's no perfectly right or perfectly wrong way to use the Fibonacci. I know it is a mathematical sequence, and there is actual correct way to do it. Don't get me wrong. But if you fudge it a little bit and it just makes perfect sense, I usually just go by that. So I guess the real thing is to go the new higher low to the top of the run. Now keep in mind, someone always says, when you draw trend lines or you draw on levels, do you use the body or the wicks of the candles? And I make the argument that they are the same. The wick here is a body on a lower time frame, right? So you see here we have this large wick. That's a nice doji candle, right? That is a princess of a doji. Textbooks would love that. Oh, it's a little higher on the top. But anyway, this high wick right here, if we drop down to the minute, will become bodies. And if we get in there, of course, no, it's still a wick. But anyway, if you get enough lower on a time frame, you will see that a wick on one time frame is a body on a lower. Now we're just swimming in a sea of... Okay, now this is like a super finite wick. But the idea stands. If we're looking at 1 hour... What is going on? I feel like I have like a ghost in the machine. Every time I go live, it feels like I have a ghost in here. So we marked off the 50. The 50 is the yellow line. We can get rid of the Fibonacci. And still, this wick is still haunting me. So to answer your question, do you use the wick or the body? Keep in mind that the wick is on a lower time frame or bodies. So this is pure data. It's not throwaway. It's not garbage time data. This is real data. But if it works better to line up your trends using the body and then other times the wicks, then that's the way it lines up. This is your trend. This is not going to be... It's like what they say in the market research. There are no wrong answers. Just tell us how you like our product. And then you can fudge it to how you feel more comfortable. Because that's all it really is. These are tools to help you trade, to help you make a decision. So yeah, you can learn the correct way to do it. But then what feels more comfortable to you at the end of the day is what really matters. And what I like about trends is that you can draw one here. Okay, good. Touch, 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 touch. But when we have a break of it and then happen like that, watch what happens if I move this here. It's the same trajectory, the same degree of angle now that it's respecting. You see that? So you can actually make your trend wider and it still has the same degree. And then we have a middle. Now we have a channel. Top, bottom, and a middle. We're all waiting for that 236. When we get to that 236, we're going to have a decision to make. We can either break it, retest, and go higher, which would make good sense. We have this whole long red slide that we can easily slide up. But if we look at the trends on a higher service, the trend is your friend until it's not. So right now, we're going to respect that this is the trend to adhere to. Until it's broken. We're not going to assume that this holds and play into it, but we're going to expect it to. And when it does, we can play it. If it doesn't, we can play it. So in other words, if we're in calls on Tesla, we can have a profit target of 236. If we're feeling puts on Tesla, we want to play the downside, we wait. We wait until 236. Right? And it make perfect sense if it retouches that 50 fib and we close out the week at 236, open up next week, we play to the downside. That would be a nice, perfect world for me because I like getting in to the weekly calls on Monday and then maintaining it through. And this is a conversation I had with Bryant, and to me, it's the more interesting way to do it. You get in on a Monday, and then you maintain it throughout the week. Rather than the closer you get to the Friday, the closer it becomes a 0 DTE, and it gets a little messy. So Powell is reading through his data, or his tone right now. We've made a new high. And let's see how this looks in the lower one. Made a new high, came back, the initial support failed, but then it found support at the previous resistance, and now we're going on our higher way. We're reaching the 552 line, and now remember, this is one of two options here. We can get rejected at 552, hold our new support line for higher, or we can lose. I don't know what that alert is. I'm sorry about that. I don't know. That's a new one. We can hold this level and go higher, or we break it and we come back down. And if we look at the updated, you know what? Let's look at a snapshot first. There's going to be a new snapshot for SPY on 0 DTE. 550, absolute. Now this high one, 552 still. And if we look on the advanced GIX, remember, this is the one we were looking at. Are we still on the 0? Yeah, 0 DTE. This is the one we were looking at. We're at 30 million and it's a secondary. If this is now higher and it's the primary, that'll be interesting at 545. So take a mental picture of this. I'm going to hit refresh and we will find out. Let the cards fall while they may. All right. Place your bets. So it has not taken the lead, so to speak, but the 550 has gotten higher. So the pull down still stands. The 545 is decreasing. I think this just increased, though. This was lesser 2 seconds ago. So now when we take this off, we'll cycle through the other ones. The put open interest, bam, 545, still going strong. The call volume is going to be interesting because we're above this. So now this is actually becoming support, at least in my mind. We traveled over that. Now that call spike is going to be support. Put volume. This comes a little bit of support, and that's the main spike right there. And what about call open interest? Still at 545, call open interest. Funny. Right. Stretching is an activity. Yeah, guys, don't forget, guys and girls, if you're sitting at your trading desk every hour, get up 10, 15 minutes, just stand up at least and stretch a little. You got to get that blood flowing. It's a lot of my medical issues revolve around they don't revolve around it, but being sedentary is something that I was explicitly told not to do. So when I told them I work at a desk all day, they said, well, try to work at your desk without being at your desk. However you can figure that out. Meaning stand up, take breaks, walk around, exercise, move your feet. I'm a drummer, so I try to practice out my double bass techniques while I'm sitting at my desk. That's moving my feet, moving my legs around. Just a little PSA for you guys right there. But I mean, this is the long and short of how I use QTA tools. And there may be other ways to use it. So I'm not saying that this way is the right way. It's just this is the easiest way for me to explain it because that's the way I use it. When you do get into day trading and you get into a little more specifics using the SPY or the Qs, the SPY oval charts are going to be your new friends. These are the SPY option volume chart is just like we're looking at here, but there's more data. And this could be, we'll talk about this more when, I would say after you get in and become a gold member, we can look into this, but this is not something to cover right away. It just talks about the same thing we were talking about, call blocks, call volumes, the ranges when we spoke about earlier. The ranges, previous volume range is basically sentiment. It's where the sentiment was yesterday, where everyone was looking at between that range, and we can use that and play along. This helps a lot if you're day trading on the SPY and the Qs. The Qs is new this year, and it's gotten good feedback on it. If you're into SPX, there's the trade engine for SPX. I won't get into it now, but it basically just, it will tell you when there's the conditions are right for an iron condor. It'll explain everything to you. It's still in the beta phases, so this is like a new member of QTA. It's still learning how to trade, but this is when this is good to go. It's going to be a game changer. So if you're into SPX, you want to watch this closely. Keep an eye on it, as they say, right? So the SPY is starting to pick up some steam here. It doesn't look like this resistance is going to hold in a retest here. So what do we look for instead? We look for, what is this breaking? Wait a minute, where is this going back to? Why do we draw this line? That doesn't make sense, right? That makes more sense. 53.10. And that's going to be a support break. The resistance here, that's the main one. Let's seeing how low can you go? See, now we're on the 15-second chart. I pulled this up just to show you. When you zoom in, you get a clearer picture of the action. Remember how I was saying wait for a break and retest? We have here, you have a break, a little retest, then a more significant retest. And if we come back down again, it's going to be an even more significant retest. I went down on the 5-second chart just to show you that. When you look at the 5-minute, you don't really see that action. You just see one green, broke it, another green. But there's actually retests going on within these candles. So when in doubt, zoom out and trying to think of something else to remind it to zoom down. I don't know. Hey, Monica, we need to move. All right, Amit, it's a pleasure meeting with you. Yeah, feel free to reach out, DM me with any questions. I'm gonna do more workshops tomorrow, and into next week too. So if you guys are on the fence, you're thinking of joining, reach out to me. We can go over anything you want for the next workshop, or even do a selective one-on-one. If you don't have a good working knowledge of options and you'd like to learn more, I do one-on-one sessions, we can set something up. I also do private classes. I'm going to be working on maybe like a 3 or 5 student class, more on hands. But if you have a working knowledge and you're just on the fence of joining QTA, take the code. It's DNOW30. It gets you 30% off your first month, and it will get you started. Monica, you're funny. I like it. So we're still looking to get this retested, this area right here. 551.50. Right around there. If you guys are a part of QTA already in the public area, great. If not, go to quanttradingapp.com. Hey, Razor, you can hear me. Cool. And there's a public area, thriving. I don't post too much of the quant charts and the Gex charts here. I do that more in the enthusiast chat. I'm thinking of changing how I post in the enthusiast chat. Rather than signaling, I want to maybe try and post examples. So kind of be like retroactive rather than proactive. But in public chat, it's great. We have a nice conversations going. So if you're not a public member of QTA and you just stumbled upon here on YouTube, consider joining the public area. It's free to open to the public. And you know what? Let's take a look at AMC if you guys don't mind, just for kicks and giggles. Just for kicks and giggles. I like this little inverted head and shoulders. This yellow is the next resistance that we're looking to break. And you know, you can say what you want about AMC. It's still interesting. Right, we're in this like flat ever since the split. We've been in this like flat grave, but look at the RSI. RSI is climbing. This is bullish divergence at its best. Solid level price action, rising RSI valleys. And if we slide this, you can see the MACD. The MACD is making new higher lows, and now it's holding above the zero barrier in bullish territory. So AMC is a totally wildly different investment choice, but a lot of people follow it, including me. Coherus, this is one I've been adding to recently. This is a biomedical stock, and again, another inverted head and shoulders here, and a double touch. Let me turn these on here. Double touch, and this is stuff that we can talk about that's not specific to QTA. Right, like I examined before, this doesn't have the derivative market healthy enough for it, but it's still technical analysis and it's still investing. It's good stuff. And CRISPR. Oh, I missed it on today. I was saying to myself, today holds the VWAP, it'll be a good day. I want to add a position. So this is another example of being in a pattern and in a holding pattern. We started the pattern here, we retested it here, and now we might retest it here. If a break happens here, we're going to look for a break and a retest, just like we were talking about on the SPY. Break of this level, and a really good would be a break of the pattern and the level at the same time, and a retest of both of them. So a break of this triangle, a retest of the triangle and the pattern to go higher. In other words, in other cases, we could still just be in this pattern until the pattern ends. We could get a forced decision. So QTA, really good large cap, middle cap, small caps. Really good at finding confidence for your levels. Really good at finding sentiment between those levels. So we found the levels on SPY. We found the cold, hard, rigid mathematical levels. We found the technical levels. Then we overlay with the sentiment. And that 552, which we're just passing right now, we're going to pull it up this before we leave. I got to take a look at it again. We've now passed that 552 zone, and then we said once we pass that, see what's going on here. There's no real spikes going on here because up to 556, it's just, let's look at it on a chart rather than explain it. Up to 556, it's just the red, that downward move. There's no real ceiling, so to speak. Just down, down, down. An easy slide to 556 would work great. And that's still part of our range from the reaction here at 2 o'clock. So this was the 2 o'clock, right? Right here. Bounced off the VWAP. A nice leisurely stroll. Testing that resistance right now. A break of that resistance, we get 556. That 545, was it 545? Yeah, 545 put. That's probably way down right now, but that was more of a, that was the inexpensive hedge. Like, in case it flushed down, it was there. So we had a call that was out for Friday, a put today, and a call out for Friday. Right now, our call would start gaining in profit, and the put hedge would be losing in profit. We want the call to make profit faster and be more plentiful enough to cover the price of that hedge. Again, this is another lesson and breakdown on how to set up a trade and what types of puts and calls to get in order to hedge, in order to cover your bases. But for now, just examining where to go and where that sentiment is, we use the QTA tools. And just to highlight this again, hang on a second. Who's this calling me? Oh, hang on a second, guys. All right, all right, all right. So I put in chat my email. That's my direct email, doc@101stocks.com. If you were interested in private classes or one-on-one sessions or anything like that, talk to me. We can discuss it. DNOW30 is the code you'll use for the quant trading app tools. You can get the 30% off your first month. And once you join, you can reach out to me for any specific questions or just reach out to the community. The community is amazing. I mean, I'm really not just, saying this to say it, but I've been around a lot. You can see all the servers that I'm a part of, that I've been a part of in Discord. QTA has one of the most mature, the most serious, but the most helpful communities that are out there. People really do care for the other's well-being. Check it out. Check it out. It's interesting. I don't know what the thinking is for the Fed meeting always to be at 2 o'clock. I'm I don't remember if it ever was at 10 or 11, but something earlier in the day, it would be more interesting to play that out. There has to be a reason why they do it right to the end of the last 2 hours of trading. There's obviously a theory someone figured out that was the best way to do it. But a lot of times you'll play the instant reaction and then the next day. That's what we were talking about earlier, that I would play the quick play to the downside, and if that didn't happen, the long play to the upside. In this case, we did not have that dip down, that quick put. That hedge was not needed, but does that mean we shouldn't have got it? You know, the hedge is meant, you know, it's like insurance. You want to have it, but it's okay not to use it. Right? It's not like, oh man, I didn't get to use my insurance this year. No, that's okay. Not going to the hospital is a good thing. You don't feel like I wasted all that money on insurance. It's something that you don't want to use. Can you guys tell that I sold insurance before? I might have sold a couple contracts here and there, but that's the idea. It's something you want to never use, or you never want to need it. We're passing the 3 o'clock hour now. I think we're gonna wind it down. I'm really aiming to do like 45-minute videos. I think that's like the attention span. I'm looking at the concurrent views, and I think at 45 minutes, that's where I start to lose people. Monica, you are invited here all the time. But the idea of like what we're doing here is, I want to stress that this is not a place to... Oh, you're very welcome, Monica, and thank you for coming through. This is not a place that we want to shadow people. A lot of Discords will advertise themselves as, follow me, you'll make 300% out of this one trade, and Netflix I bought at $5, and now it's, blah, blah, blah. That's great. What we're doing here is teaching tools to how to invest for yourself. Independence is what my vision is. Independent traders. And when I met with Brian and he shares that same vision, that's where everything just starts clicking. So Brian, an amazing trader. He identifies as an avid user of QTA. QTA is a tool that he uses. He created it for himself. He uses it. And he's probably the best user of it, and that's why he posts a lot of what he does, especially in option spreads. So get to know how he uses it. But the idea, the goal, I would say, is that for everyone to learn the tools, apply them for themselves, and then share what they get in the community. So it's more of a robust or of a well-rounded, more of an education rather than definitely more than following, right? We don't want to... There's something to be lost when you shadow someone and puts out alerts. There's a disconnect in there. But if you learn where those entries and those exits are, you can be self-sufficient. And that's what we're trying to do. And if you need anything, any help along the way, reach out. I'm always here. You can find me on Discord. And if you're questioning whether you're talking to me, if someone IMs you, or IM, my God, it's going back to AOL days. I just revealed how old I am. But yeah, and if someone DMs you, direct messages you and says, hi, I'd like you to try my hedge fund and, just send me crypto, I won't do that, right? I'm not into crypto. I don't ask for any money or anything to do with crypto or hedge funds. If you have any questions, just click on here, not that specifically, but you click on my name or my little picture, and there'll be a message thing on the bottom here. You can reach out to me that way. And if you get a message and you're unsure if it's me or not, do that same thing. Click here, go to message and ask if that's me. But I will not ask you to invest in anything having to do with crypto. And thanks for coming. If you guys haven't already, make sure try and hit the like, subscribe, and get notified when we do this, because it's I do this more, try to be a rigid schedule, but it's more on demand also, rather than just a set time. So I'm adjusting this because I saw that this was touched and it got rejected, and then we broke it and tested it once, and now we're testing it again. This is the true support line, this true support and resistance line. And I'm not saying a lot of people, but I've heard before, once you draw a line, you commit to it. Do not move your lines around, dude. I disagree with that. You have the price action. It will tell you where its support is. It's telling me right here that this is support. And then it's confirming that because this was resistance. So just move that line. Move that line. See, a little touch there. Touch, rejection, powered through. And a retest of that line would make sense. So a failure here, but a hold here would make perfect sense. We'll adjust that to here. And then tomorrow, at the next workshop, we can test to see how that worked out. But the 556, if this holds, is open, the top of the range. And when we get to 556, we'll start examining what the data looks like for the down move. Remember to cover this gap right here. Why don't we move that there? Sorry, line. I know you're without. Oh, no, you have this one here. That's almost perfect. I'll leave that. All right, sports fans. So that's really, I wouldn't say that's everything. No, it's just like the tip of the iceberg. But that's really the basics. That's the fundamentals of how to use the tools. And we'll come back and we'll check it in tomorrow. We're going to check on it tomorrow. And what did we say about Tesla? We'll leave you with one more. There was a break, retest of here. It didn't happen. This is kind of like a flag. Are we on the top of this trend? What's that trend? Let's zoom out. Oh, that's the middle of the trend. Right, so 236.72. That's the point of inflection. 236 actually, right? 235.98, 236. We will revisit this at 236 because a break of 236 then opens up movement higher. A hold of 236 will then open a flush down. Now, if we just travel along 236 and we reach it at this trend, it's creating an ascending triangle. Rising support, steadfast resistance, bouncing around in between the two until we have a decision, a forced decision. We also will intersect with the top of this trend. This is where technical analysis gets real fun. So we're in this downtrend. This is the bigger channel, downtrend, which could be arguably a flag, right? Nah, definitely not a flag. Downtrend, reach the bottom, and now as we're reaching the top, we're running into resistance. This other subtrend is pushing us up to the top trend, and now we have a symmetrical triangle, right? A symmetrical triangle inside a downward trend with resistance at it. That is an intersection of three patterns coming together at this one level. Granted, if we break this today or tomorrow, we can use this as support, those levels, the symmetrical triangle and that level. Support to go higher. If this holds, it's either way 50-50 shot. We will revisit the data as we get closer to it. And then next week, we'll have a box up to 256 or down to 200. Fair enough? So keep an eye out. And remember, we don't have to trade every day, and we don't have to trade all day. Pick and choose your trades. Focus on them until you get those perfect, and then you can add more. A common misconception is I'm going to place 5-7 trades. One or two of them have got to hit, got to win. Remember, it's not like horse racing, right? You're not going to bet on 5 different races and one or two of them win. Hey, we're great. That covers it. We want to reduce it down to 1 or 2 trades and get that perfect. You know, we practice, we don't practice until we get it right. We want to practice until we can't get it wrong. Once we get 1 or 2 trades methodically and consistently on a good winning ratio, then we can expand to more. So more is not always better. Focusing and honing in on your skills on one or two is much, much better. And it's a lot less stressful too. You want to focus your attention on one. You want to stare at one chart all day. There's monitors. My good friend Solus, and you'll see him here in the community. He's got a sick cockpit, I call it, and he's got monitors everywhere. He can do that. He has the experience to monitor things at the same time. When we're just learning, especially a new tool, you want to focus, laser focus everything you're learning onto one. I'm staring at this Tesla chart. I want to be staring at this all day. I'm incorporating SPY just because SPY is a heavily traded ETF, and it's good for examples like this one. But don't spread it out thinking, oh, you know what, if I just increase my my activity, I'll get a couple winners here and there. We want to have 80%, 90% win rate. And we want to have that on as least amount of trades as possible. More trades does not equal more gains. More trades usually works out to more losses. Less trading, less risk, more gains. It just takes time. It takes screen time. It takes, practice. So with that being said, thank you guys very much for coming in. Like, subscribe, hit the bell, whatever you need to do. And reach out to me if you have any questions. And I'll see you guys here tomorrow. Thank you guys very much. And peace out.